The following is a presentation of TFNN. The Power Trading Hour with your host, David White. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, David White.
And welcome to another exciting edition of the Power Trading Hour. Me, your humble, lovable, and squeezably soft host. As we said over the last 2 days, I was looking for higher in the market. We got to, 2058. I was looking for 2064, 2062 is kind of the high. That we can't get there probably says the market's a little weaker than I thought it would be. Of course, if you listen to the show from Monday on, I'd turned kind of a bullish in the fact that it wasn't expecting much lower prices. Did think that there was going to be an opportunity that did exist. Hang on just a second. That did exist for some last-minute options. That is the monthly options expiration this week. Got rid of the shorts, went long on Monday, and we did well with the longs. We had a couple of them in the longer-term newsletter, and we're playing options in the trading newsletter. But they did well, I would have to say. But we had to kind of wait to the end. I was buying a great deal of out-of-the-money options yesterday morning. A lot of the stuff that I play is too thin to put in the newsletter. There just aren't enough. And that brings me to one of the questions we had in an email, which is why I don't play and do what I do each month with monthly options for weekly options. And there was one good reason, and that is that you've got to have a big enough market to actually make this work. If you got 10 calls, no option market maker in his right mind is going to, spend or worry about losing $5,000 to move a stock with a $250 million market cap. It just doesn't make sense. And that's the part of it. You've got to have an idea of proportionality with options. There is a reason why. In fact, we'll get into it later. But, when I see the options we were playing, one of the options we were playing had 4,200 contracts today, trade. And they are in the money by quite a bunch. So, as I said yesterday, if the market went up.
He's got money coming out the wazoo.
What do we have?
Money out the wazoo.
Not enough, though. I would want more money out the wazoo. A good day, even a great day, but not a spectacular day. 3-4 times a year, you're going to have the ability to make absolutely god-awful amounts of money. We came close this time. I suspect there will be many more to come this year. So what else are we doing? And thank you, Mr. Fletch in the den. We have to be really thinking about as we turn into next week. And, I forgot. Everybody likes to hear it. I get so many emails. I will just do it now.
The following takes place between 2 p.m. and 3 p.m.
It does every day. What do we have next week? Well, it's the beginning of summer trading. Normally, what we will see is the week before the 3-day long weekend for Memorial Day, lighter volume each day until Friday. What does that do? There is an old chestnut in trading that says do not be short a quiet market. We continue to see massive amounts of people being short. We'll talk about how that played into one of my trades this week. But you have to look at just how deep some of these shorts had gotten without the ability to actually break many of the stocks down. The indexes were probably telling a slightly different story, not a completely different one. But I was not expecting the market to fail this week, mostly because of the huge shorting and the lack of huge destruction. Destruction that came was in individual stocks, and most of those in retail. And we'll get into that, I guess, and other things into today. But the market kind of taking a breather now. We're up 11 points in the S&P cash, 2051.42. We had a high of 2058 and rolled off. But I've sold all of my calls from the last 2 or 3 days, and glad to be pretty much all cash in the daily trading newsletter, and have a couple of good positions already staked out in the longer term newsletter. When everybody was throwing the baby out with the bathwater, we were able to find a couple of gems, a couple of diamonds out there, and we will continue to keep an eye on them. But up very strongly today, and so I can go into the weekend feeling happy. You can have a bad 6 months in the stock market. You can have a bad year. What you can't afford to have is be broke and not be able to come back from it. So it's all about money management and waiting, as I do, for the big fat pitch down the center of the plate. And I probably have a style that is tougher for more people to follow because they don't really get it. And that is that I will make more money hitting the big home run in the World Series and being kind of Mr. October than I will making a daily living, working for hourly wages, flipping stocks back and forth. I was talking to Andy Heck about it. He says he called those guys quarter flippers. And you can make money daily. I've done it. It just became rather tiresome over a number of years. And I've slipped into something that works for me much better. But I, on the other hand, do not have to make money every single day. But you will probably tell from this radio show I'm much happier when I do. It is a time to get this party started.
That it's all just a little bit of history repeating.
It is history repeating on this day in 1999. eToys, a startup internet retailer, goes public on the NASDAQ. Initially expected to price at $10 to $12, the stock is underwritten at 20, quadruples before the opening bell can even ring. The first trade is an astonishing $83.09. That's back when they had something called teenies. And that's what that is, 9/16, teenies. Anyway, the shares closed that day at 96 9/16, 1 day return of 282%. And, of course, after the end of that day, you just say, I'm done for the year. Most people didn't and gave all their money back. Just 19 months later, February 26, 2001, the company announces that it will file for bankruptcy. Like many of those beanie baby stocks of that time, you've got to know when to hold them. You got to know when to fold them. You got to know when to run away. Man, was it time to run away in 1999? We'll come back with one more history article, then get into this news, because when news breaks, I am here to fix it.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Dave takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
In 1974, the Consolidated Edison Company of New York is lambasted at its annual meeting by shareholders who are infuriated the company is about to skip paying its quarterly dividend after 89 years of uninterrupted payments. What are we to do? Lamented one widow. Who's going to pay my rent? I had a husband. Now Con Edison has to be my husband. The lesson here is I don't care how long a company has been paying dividends, there's always the day that they don't. And I think you just need to know that. For those people that love dividends, I always just assume that one day they're going away. I like to value them minus dividends, but that's just me. But there's always the last day. It's always the last day you work for somebody, always the last day you get a check that doesn't bounce from them. There's always a last day. Just have to know that it's coming. It's like motorcycle riders. There's those that have crashed and been down, and those that haven't crashed. They're going to crash if they continue to ride one day. You just have to be prepared for it. Speaking of motorcycle riders, one of my merry band of misfits has decided to go halfway, in fact, go all the way across the country. But halfway, he stopped to email me this wonderful picture in the middle of Kansas. And it makes me just want to cuss. And if you're not watching Tiger TV here, I will read this out to you. It is a gas pump, and it's in the middle on I-70 in Kansas. One says unleaded, 87 at 205.9. The other one says 100% gas, 91 octane, $1.59. 9 cents. If you think that there would be a place that would have more expensive gas because alcohol was actually cheaper, it had to be Kansas or Nebraska. No such deal. Down here, 91 with no alcohol is about $3. There is something desperately wrong with this country, and I want it fixed, and I want it fixed now. Anyway, Friday, of course, is always the day that I put out my Tech Insider newsletter. It's the longer-term investor newsletter. We've got 2 long positions in it now. I'm hoping that the market holds well enough that I can continue holding those for a long time. You never know what's going to happen over the summer, but there is one thing, and that is when the threat of higher interest rates come in, that technology tends to get a floor underneath it. There is one simple reason. That is, the cost of money is not a big deal. When you're making margins like Apple does at 65%. It is one of the things way down the list of being problematic. But kind of a big idea this week, and I'll talk about it a little bit here. And that was Google's had its big conference this week for its developers. I explained probably the real nuts and bolts of it in the newsletter today, but I will kind of broadly brush that everybody is getting in a war now for Google, Facebook, Microsoft, and others. It is an Apple. They are. I'm going to say that there was a period of time back in the 80s where everybody was fighting against everybody else. There was always 5 companies fighting against each other. And for the most part, Google, Amazon, Facebook, Microsoft have all kind of eked out different slices of the pie. What I think that I saw out of Google this week is the first shot across the bow that everybody's going to get into everybody else's business. I don't know what that's going to mean for the prices long term, but I don't think it means that these things go wildly up. Google does have a piece of hardware that they announced this week. That piece of hardware will give them kind of an edge up, at least in the short term. It's not for sale yet, but it's very interesting. But I do think there is going to be a dog fight. If you haven't seen a pack of dogs all fighting against each other, you'll get the drift of this. But there is a storm coming. Skynet will become self-aware, for anybody that gets that reference. It is very close, but we have Google, who wants to give up, wants you to give up all their privacy. We have Apple, wants to give up none of your privacy, but pay out through the nose. We have kind of Facebook and kind of Apple on opposite corners. You'd almost call this a Mexican standoff. I don't know what it is when you get 4 people standing off. I don't think it's the same thing. But I love the good and the bad and the ugly. And, of course, the Mexican standoff scene at the very end, priceless. But we've got 4 people, and they're all pointing guns at each other. It's hard to actually figure out who's going to be the last man standing. But Google says that this is their 10-year plan, and I believe them. I've been writing about at least the subject for the last 4 or 5 months. I've taken particular courses in machine learning. But it is going to be a knockdown, drag out. And if you thought that people were into each other's business before, I would not be surprised to see Google get into delivery services. I would not be surprised to see Amazon get involved in search. Would not be surprised to see Apple get involved in server businesses. I think everybody's going to try to get in everybody else's business. And as they say, the short man in the elevator always has his nose in somebody else's business. And I suspect that's what we're looking for in the year and years to come. The knockdown drag out that was probably 1989, maybe 1890, all the way through the end of that decade, where you saw so many companies come and go as they beat it out, and not the nice way that they're doing it now. It's kind of the Ike and Tina Turner thing. They don't like to do anything easy. Those 90s were tumultuous at best and a chaos at worst. And I think we're going to see a great deal of this come to fruition. But Google fires its first shot with some specialized hardware to make I'm going to call it just the NUI, the natural user interface of spoken word. And they fired the first big shot in this war that is to come. And of course, at the end of it, Skynet becomes self-aware. Footlocker dropped the big losing price today. We'll look at its chart in a minute. Pretty ugly. But I went back through most of the losers out here. And if you do not have a door facing the parking lot, it seems to me if there's one overwhelming trend that I've seen in all this retail business is that if you've got even if you're in a mall, if you've got a door to the outside, you're doing kind of well. If you're trapped inside, like Footlocker and so many other of these retailers that either have claimed bankruptcy or doing horrible, you're trapped somewhere inside the mall. I thought that was very interesting. Can't prove it, but it seems to me like the way that the cards.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now. Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Directions Daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC. Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
And as always, I appreciate your phone calls at 877-927-6648, your emails at path@tfnn.com, and your questions in the den. As always, and of course, I ask you to, if you like the Power Trading Hour, if you find it useful, to just tell two friends, because if you just tell two friends,
and he tells two friends, and she tells two friends, and so on, and so on, and so on.
everybody will be listening to this show. And I won't have to say horrible things about Jim Cramer anymore.
Bring me the head of the false prophet, Jim Cramer.
Anyway, we move on. Had some questions. We'll get to Footlocker in a minute. Had some emails about my trade on Netflix. We were bought the 90 calls, and we were buying those around 65 cents or lower. I think they got down into the 40-cent range. Had to kind of hang on an extra day. I thought yesterday was going to be the beginning of the bounce. And of course, a little bit of terrorism kind of threw some cold water on it. But I still thought that we were looking at Netflix getting somewhere between $92.50 and $95 today. I think it got up in the mid-93s. We might have sold it a little early out here, but I wanted to show the reason why that we were in this trade. And we'll go ahead and actually, and FLX, look at the chart itself. But a lot of times it's not just one thing that makes a great last-minute trade in options expiration. It is many things. I start with figuring out where the option market makers are. I've written my own tool to do it. The reason why is everybody will say, well, the max pain is right here. Well, just because the max pain is there doesn't mean it's going there. It does mean that that is the bias or the way it's biased if it is close enough. There are many things, though, especially coming out of a bottom like yesterday. You've got to have the market with you. I thought I would have the market with me. If I went long, even the futures for the S&Ps, I didn't think I was going to make that much money. To me, the money to be made is finding, especially where people have to buy shares back, especially when you go into the weekend and they don't want to be hanging out there. The next tool that I've worked on, we had the webinar in January, is actually looking at every day's short volume. It's available through FINRA, but the most important thing is it probably takes you a little bit of effort to go and dig it up. I've written a tool to actually write down them every single day and put them into a database and look at them so I can just click to make it a little bit more, because it is where I make a huge amount of my money each year. And one of the things that I don't have, and I need to change it actually, it just says Stat 1, but that is the percentage of stock, or actually shares that day that were traded with as short sales. Doesn't mean they went home that way, but doesn't mean that the initiation for the trade was a short sale. So 1 out of every 4 shares yesterday on Netflix is a short. Well, you've seen that for 3 or 4 or 5 days. And if you start looking at the chart over here on the other side, if you really don't start seeing a lot of effect on it, it sounds to me like a lot of people are trying to push on a string down at the bottom. I thought that the volume was awful light. I also thought, just like most of the market makers, that over time this thing is probably coming back up to the bottom of this gap, which is just under $100. So to me, the bias was that way. We saw a lot of shorts jumping on this stock, not getting a whole lot of reaction. And when I will go back and look at the option market makers, they never blinked. The projection for max pain went down about to $3 since Monday. As long as this thing didn't start to crater, I was pretty sure that by the end of the week, at least some of these shorts would start to cover, that it was probably far too short to actually do it. And you can put this together as part of it. You can also look at the bi-monthly data that actually shows how many shares are short and how many days to cover. And it's been higher, but Netflix has seen its days to cover go from 4.1 to 3.1 to 1.7 the last time. And we saw a ton of people pile on this thing again. My thought was that they're not getting much of a reaction, and it won't take much of a bounce to actually get them to run this stock. And the risk reward is great. One of the things that you need to know is when you use options is that you use them to reduce risk, not put much more on. And that is the reason that most people that play options blow up, is they just go far too deep in it. So just remember, use them sparingly. I choose to use them at this period of time because I've got charts, I've got data that gives me a good indication of which one to go after. One of the other ones we did was GoPro. You know, I bought them at 7 cents, it sold them at 15. So no big whoop there. I was hoping that they would go to 50. GPRO. But normally you look at the most hated of stocks. And GoPro is also another good example of that. A lot of people piling on it in the last few days. I didn't get the kind of move that I wanted in it. There were some others that I didn't put in the newsletter because they were too thin, that popped very well in the semiconductor space over the last couple of days. But you know, you get a good indication that everybody's on one side of the fence coming into expiration, and it's good. But again, I don't do this but once a month. The reason is that you've got to have something like Netflix that will trade 4,000 contracts on expiration day. You can't have something that trades 20 contracts on expiration day, and that unfortunately is the way that a great deal of the weekly contracts end up, weekly option contracts end up. You don't, one, get a good indication, and two, there isn't a great market out there that gives you a good indication of what people are thinking. But that's why I do it monthly. And even some of these stocks that have monster short interest will probably pay off one time. GPRO. I thought maybe I'd get $10 out of GoPro, or at least $9.50. And got a little. That's all we needed to get. We bought these yesterday, like I said, for I think 7 cents. And I sold mine for 15. I think it went as high as 20 today. But what can you say? Anyway, we wanted to get to Footlocker. You can give me a call at 877-927-6648. You can also, of course, email me at path@tfnn.com, as many people do. Just the sexy people, though. Footlocker down fairly strong. In fact, let's look at a little larger scale out here. Again, any of these stocks that seem to be trapped inside the mall tend to not be doing well. This is blown through its previous low, headed back to $51.12, the January 16th low. Look at the gap next when we come back.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
If you're looking to discover a new financial resource and diversify your financial portfolio, don't miss out on the Market Safe Commodity Solution CD from Everbank. This is the second running of their popular 5-year U.S. dollar-denominated CD, which gives you exposure to 8 equally weighted commodities, including WTI crude oil, gold, silver, copper, nickel, soybeans, corn, and sugar. With annual pricing caps of 70% per component, you can earn up to 70% upside payment at maturity if the commodities increase in value across annual pricing dates. And should the opposite occur, your principal is 100% protected. Keep in mind, returns are based on CD performance. There's no annual percentage yield or periodic rate of interest on this indexed CD. Don't miss out. Take advantage of this financial resource designed to grow with the times. The May 19th funding deadline is quickly approaching. So hurry over to everbank.com/TFNN for the CD's term sheet and other important product details and disclosures. Once again, that's everbank.com/TFNN. This advertisement is sponsored content. Everbank is a member, FDIC.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now, you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile-based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Had an email from John from Clearwater. Wanted to ask if I would just show a quick chart of Tesla and say why I probably wasn't short this one. Even though everybody knows how much I think that one day it's going to $40. I just don't know the day. This one was another one that had a lot of people to the downside of options expiration. And, if you were down here about 205, man, I was getting ready to buy it, and it went through my fingers. And then, of course, after the bell, the thing went to 202 and would have scared me if I had gotten it. And then, of course, Goldman Sachs, with egg on their face, pushed it up to 217 today. But it wasn't far from the rest of these when you look at how many people were shorting it. This thing for the last 3 days was mostly in the 20%, or 1 out of every 5 shares traded was an initiation of a short position. Gives you just the kind of idea what you want to stay away from most of the time. As we said, where do you get the chart that option lines crossing? Yes. Question is that more of my programming? And the answer is yes. If you go out there, you'll find the charts, or you'll find something that says max pain, but normally everybody just looks at the single number and doesn't really look at what they should be looking at, which is that some people call it the smile, or the volatility smile. It's kind of the exact same thing when you look at that, and we're looking at the SPYs right now. Last night they closed at 204.20. Pain was 205.75. All week long I said I wasn't really looking for that big of move by the end of the week into the SPYs, and that's why this is a pretty good indication that you got a nice big bowl out here that more than likely you're going to find the at the end of expiration, everybody kind of in here. I'm looking for the actual SPY right now, 205.38. How close is that? 205.75, 205.38. These do not work every month, and so that's the other thing that I need to make sure and let everybody know. But it's more a range of probabilities than an actual number. It just, as I said earlier in the show, when you see option market makers not blink at all, if they don't get to as selling and buying and pushing stuff around, they pretty much have a pretty good idea that they're more than willing to let the week play out no matter what happens. Even a yesterday move, they're not going to get too excited. But one of the reasons why I never really thought there was that big a deal I liked the fact that they were throwing the babies out with the bathwater over the last few days in some of those tech stocks. And again, when you looked at the individual tech stocks, the option market makers did not blink. They pretty much left the options where they were, which give you a good indication of where the bias was. Doesn't mean that it's going to get there. But the S&Ps, as I said, I think on Monday, weren't going anywhere and weren't going anywhere in a hurry. If you were going to get a surprise, it was going to be in the NASDAQ. And I wouldn't say it was a huge surprise, but that's where the action was, at least for expiration. And again, if I would have played the actual indexes, probably wouldn't have been that much money either to be had. It was in these individual stocks when you dig into them. But the answer is yes. I wrote this program myself. It wouldn't be anything for anybody else to duplicate. But it's not a single number. It is a range of probabilities, and that's the way you should look at it. The most probable thing was 205.75, and as you get off to the tails, it becomes less and less probable, right? So if you're way, way off, a lot of times these are meaningless. This time they were meaningful. So we'll go to some of the other stocks of interest. Wanted to talk about Gap. This one, of course, a little bit higher out here today. But again, most of these Gap stores I've seen are all trapped inside a mall. And I don't think that there's anything else out here. The one thing I would say is when you look at Gap, you may have had the last gap down of a 3-gap play. If you look at the first gap, this was the one back here at 46.85. The next day was September 5th of 2014. This thing has its huge gap down. Then you keep going down here. You get your second monster gap down. What is that? The 8th of April. And you get your next big gap down on the 10th of May. This may be it. There may be some retrace of this, but normally by the time you get the last big 3 huge gap, in this one it's about a 4 or 5% gap each day, you want to look at it. So and just a thought out there that maybe these things are finally washed out to the downside. I know Gap is going to be closing some of its stores and why it's up a bit today. The big winner is Inter Oil, IOC. This thing's got some kind of buyout going, 4.9 million shares already. This is how you know a stock is truly getting bought out. For the most part, there's a good chance. Unlike some of the others that I think are extremely dubious. In the case, I think Monsanto is a good example. Monsanto, if it was going to be bought out, should be printing around 130 or 140, at least 125. It had not printed off more than about 8% or 5% up all week long. It's up a little today, but Andy's writing an article. I gave him my thoughts on it, so we'll look and see what Andy Heck has on Monday to come out. But he's writing a big egg article on Monsanto and my problems with the whole idea that any of that stuff is ever going to work. It's kind of like the Dell EMC thing. It was a horrible idea to begin with. Somehow the thing just gets a life of its own, and they continue down that horrible, semi-retarded road of continuing a bad idea. Sometimes people just wake up, kind of like Steve Ballmer waking up before he threw all his money down a rat hole with Yahoo. And other things. But Inter Oil, nice bounce up here today. JRJC, China Finance Online, gap down yesterday, a little higher today, but it's filled a gap that this thing had going back to December 16th. But I don't know a lot about it, but it is one of the movers out here today. Keysight Technologies, another mover. Let's take a quick look at the headlines and see why this thing is bouncing today. Better than expected fiscal quarter. Fell 1.2% year over year. for its quarterly revenue, so down a little bit, $731 million. Net income declined 8.3%, but of course, this thing kind of off its highs already, too. But again, some of these stocks just way too bearish going into earning. Now that everybody had 3 weeks of poor earnings, get a few that aren't that bad. Get a lot of people on the wrong side of the trade. We'll be back for the last segment. Give me a call, 877-927-6648.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
Catch Tom O'Brien, professional trader and educator, founder of TFNN. Also, a special guest on CNBC. Tom will bisect and dissect the markets. The Tom O'Brien Show, next on TFNN.
And another continuing epic story of many retailers doing poorly. The clothes manufacturer New York and Company. I remember this stock from March of 2009. It was one of these stocks that had tested its lows on lighter volume. Normally a fairly light volume stock. Not today, as it dropped a losing horn chalupa down on fairly large volume. A lot of companies going out of business are either doing one of two things. They're in the clothes retailing business, and of course they're in the oil patch. The smaller of those companies are all kind of going out of business. This does not look any good at all. If this would have been this chart in May or March of 2009, may have been a little different in the market that's at least holding its head above. Huge drops like this off of 415 just a scant couple of weeks ago, tells you probably everything you need to know about the financial future of New York and Company. Watch out for falling prices, and I'm not talking about Walmart. Got a question to look at MDVN. MDVN. Medivation. Get the dirt on this one. Kind of going sideways out here the last few days. Biopharma focus on the development and commercialization of medical therapies to treat serious diseases. Treatment of post-chemotherapy metastatic castration-resistant prostate cancer. Ugh. I don't know. I think I'm going to quit reading right now. Everything else, that's the good part of it. It gets worse as I read more in here. Anyway, if anything's bad happening to you, apparently this drug will help. It's a laundry list of horrible things. You've got to kind of watch this. I don't know what you're looking for. It has closed under the 9-day, and most of these stocks that have done this in a few times have done it. You're very, very light volume out here. The one thing I have to say, I will go back to my earlier statements in the show, and that is starting Monday, we're going to have lighter volume all the way through Friday. We're going to start seeing those summer volume really start to kick off. And, if you're long this thing, I don't know what it's going to take you to get out of it and sell it, but I would sell it. I would not be short it either. See if I can see what we have going on for short volume. Do I have time? MDVN, because these weeks, especially with declining volume, tend to be a great deal about how short a stock is, i.e. if it's fairly short and the volume continues to decline, most of the time before the 3-day weekend, these shorts will blink and get out, and you get this kind of melt up in a stock throughout the week. I would not be surprised to see this thing melt back up to 62.94, but at the same time, I would have already been out this stock, and if I was long it from $35, where this thing actually did have its last major hiccup and its buy point, or even its sign of strength when you go back to the 31st of March, I think this is a trade that's long in the tooth out here, and if you were looking to buy this thing on a retracement, you've got a ton of gaps out here, which always is problematic in that. But your last volume takes you back down to $52. That was where you would want to look if you wanted to buy this thing on a retrace, at least the first one. In the meantime, sell when you can, not when you have to. We'll see you Monday. Same bat channel, same bat time. Remember to tell 2 friends about the Power Trading Hour.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.
You're watching Tiger TV.